Hey guys, welcome back for another daily cryptocurrency market update. This is going to be a bit of a different one. We're going to take a break, although we will look towards the end of the video at the Bitcoin chart. You guys know where we're at. We've been killing it this year, and we will continue to cover the journey that Bitcoin and the cryptocurrency market takes technically. We've done a very good job of that last year and certainly this year. And if you guys want to find out more about that, how we're making money during this time period, it's been an absolutely killer 3 months for me and my community. If you want to get on board with that, there's a link to the Patreon in the description. But I want to do something slightly different in this video. We will look at the charts, but I really want to focus on Balaji and what he's been saying. And this has been trending all over Twitter. Now, this is also trending at the same time as hashtag banking crisis trending. I think Monday is going to be a very, very interesting day. We're seeing some things on the sort of financial markets, with the 2-year yields, US, with Silicon Valley Bank. We're seeing some very interesting things unfold. And although I don't think Bitcoin's going to, and I'm sorry to disappoint guys, $1 million within the next 90 days, I do think Balaji's onto something. And I want to play a clip, a YouTube short from @swan_Bitcoin with Dylan Leclerc sorry. I think I've got a Real Vision presenter mixed up with this guy. Talking about actually the year that we had in 2022 as a similar year to 1931 and 1969, which 12 months after those years, we had complete changes in the monetary system, whether it be the FDC or Nixon shock, which essentially saw money as we know it change, move off the gold standard, then to a paper standard, and now we're on a paper standard. What's the next evolution? Are we going to have another sort of heaval and change in the monetary system, which is kind of what Balaji's hinting at here. I think he's onto something. I just think he's maybe calling it a little bit too immediately. I think these things take a little bit of time to play out, but there will be a shock of something, I believe, which the yield curve's predicting, likely mass defaults on debt, which is all the monetary system is kind of held up by, that will lead individuals to look elsewhere. So without further ado, guys, I'm going to go ahead and get rid of my face. Happy Sunday, everybody, by the way. I just wanted to show some face. Let's get into Balaji and what he's talking about here. The bit signal. How do you ring the fire alarm on the internet? How do you show it's not a false alarm? I am putting up the bit signal 1 million in BTC to alert us to the stealth financial crisis. $1,000 per tweet for the best 1,000. Reply with your charts, graphs, stats, memes. Bring attention to what is happening because the central bank, the banks, and the bank regulators have bankrupted all of us. They hid their insolvency from you, the depositors, and they're about to print $2 trillion. Remember, the whole reason for QT is to fight, not QE, which is printing, to fight inflation, and we're still very much on that course. The Fed is still set to do a 25 basis points on Wednesday. And essentially, this individual is talking about them printing $2 trillion to hyperinflate the dollar. Now, we've looked at, actually, is what they did with Silicon Valley Bank, and we've seen the Fed balance sheet grow for the first time, really, a form of QE. It is in some regard. So, in the digital age, this will happen very quickly. So buy Bitcoin now and get your coins off the exchanges. Making BTC Moon is the way we send the fire alarm to the rest of the world that the Fed is hyperflating the dollar, and Moon means meme. The network state will be replying to 1,000 winners on behalf to send payments. Submit tweets here. The banks are insolvent. We should have learned to distrust the banks after the banking crisis of 2008. So actually, I've always said this. I think there's it doesn't have to be nefarious, and I don't mean illegal. What I really mean is this kind of Satoshi story, I'm not sure is actually the true origins of Bitcoin. And I can't help but feel as if it was almost divine intervention that Bitcoin came about at the perfect time. You have a replacing system or replacement for a system that's dying. And now we're seeing it all unfold. It's very interesting that what we're seeing with Silicon Valley Bank and such was actually what Bitcoin was born for. And I can't help but question the origins of Bitcoin. a little bit of me thinks that basically they might have introduced it so that you get used to the idea, so that when they rug pull you completely and just say, look, money is now what we tell you money is, you don't need to worry about what's backing it, just use it or don't partake in our system, the Bitcoin might have been a gateway to that. And I do have some, I love Bitcoin, guys. You know, I built a career off of Bitcoin. However, I have my beefs with Bitcoin. You know, I always say to Bitcoin maxis, well, what happens if the price doesn't go up? You know, you're going to buy Bitcoin in that if there's something else to buy. You know, anyway, I don't want to go down that route, and maybe I'll do videos where it's just me talking to the camera. This is going to be a bit of a longer one, guys, because there's so much going on right now. Back then, we used complex language to hide the simple fact that mortgages were bad. Okay, not sure about that. And today, they do it to hide the fact that money is gone. Where are we, guys? Not in one bank, in all banks. And they knew months ago. Don't believe me? Take it from the Fed and the FDIC themselves. So what is he showing here? The FDIC worried about growing unrealized losses in US banks' bonds portfolios. And this is going to be interesting because I'm going to talk about this clip where we've seen bonds do a similar thing last year. And there was really only 2 other years where they've done this in history in accordance with the stock market. And actually, both of those years, 12 months after, we led to confiscation of gold after 1931, in 1933, FDIC, and then also the Nixon shock in 1971, I believe. So is a similar thing coming? I have a whole video, a PowerPoint lined up on this that I'll be revealing at some point soon. So this is certainly interesting, and we have this trending on Twitter. We've got the likes of Buffett in contact with the Biden officials on the bank about the banking crisis. This is the Federal Reserve weekly remittance in treasuries. You can see this. Lynn Alden wrote a great piece, by the way, where she spoke about the and it actually might have even quoted it here, the Fed going bust. This is unrealized gain losses as investment securities. It's scary stuff, guys. Unrealized losses, lowering tangible equity. We've looked at this quite a bit on the channel. He then goes on to say, regulators knew banks were insolvent but didn't notify depositors. Why was this banking crisis such a surprise? So it's yet to become a banking crisis, I think. However, it could escalate very quickly. So is it really your job to diligence your employer's bank's financials? Aren't you paying for regulators to do that? Unfortunately, the regulators were captured, as these posts from September 2022 and November 2022 show. Regulators like FDIC and the Fed knew that SVB and hundreds of other banks had less assets in their liabilities. In other words, the banks didn't have your money. They initially used accounting tricks to hide their insolvency, and the regulators let them hide things in footnotes. So what the regulators didn't want to notify you, the depositors, that all your money was gone. You paid for all the regulations and got none of the consumer protection. It then goes to look at a number of archives. They are lying about the printing. The central banks who ran the euro literally said, when things get serious, you have to know how to lie. Yeah, guys, if you still think the government don't lie to you, please go and look at the Matt Hancock, Boris Johnson leaks. You know, it's unfortunately a world of deceit that we live in. So the entire banking system is lying about insolvency. They're trying to ensure you don't exit to Bitcoin before they print money. 4 days ago, they'd only print 25 billion. Now they're at 2 trillion. I'll have to check this out. And soon it will be infinite. Then you will have nothing unless you have coins on your... So there's also an argument for gold here. It's not just Bitcoin. So he's looking at here, March 2020. This is March 16. The Fed backstop, he scooped inject as much as 2 million. Federal Reserve, you know, it's very, very interesting what's going on right now, guys, and definitely worth your attention. He then goes on to say hyperinflation is common and very fast. The speed of hyperinflation takes people off guard. Kota made a table of 56 episodes, talks about price and so on and so forth. So they are trying to block the exit. The US establishment, it's very interesting because we have seen a lot of ramps to crypto from sort of centralized exchanges come under attack by regulators and get closed. So this guy has a point, right? calling it in 90 days to a million Bitcoin in 90 days seems a little bit crazy, but I think he's on something. I think generally he's right. I just don't think you can put a time on that. You know, when it happens, it happens. I think this is potentially what the yield curve has been predicting, mass defaults. You know, if you understand the banking system, you understand just how broken it is right now. And again, we've got things like banking crisis trending on Twitter. Monday is going to be bloody interesting, guys. So what does he then go on to say? Fortunately, there are enough pro-crypto banks elsewhere in the world that the US establishment can no longer take down crypto on its own, but America might be penned in. Remember, red flag, weddings from Game of Thrones. First they closed the... Okay, yeah, he's talking about a Game of Thrones reference. Game of Thrones is great, by the way, guys. Very, very interesting. I do think that banks are in trouble, but do I think Bitcoin is going to do this in the next 90 days? Probably not, okay? It didn't do that on $7 trillion getting printed. However, I do think he's onto something. I just think it's more of a... It's going to take a more than 90 days. You know, I think we essentially have a window of opportunity for crypto. You know, we took a pump back on the markets literally down here. And I may even release that Patreon video to you guys. We did show you the video. I also have proof of all the buys. You know, I always try and be as transparent as possible. I think it's amazing how many people have built careers off being traders and investors and never once shown a trader investment in terms of P&L or you know, actual results. It is rather interesting. So I do think crypto is set for more upside. I think it's going to get rather unruly, and I think actually all this is going to push Bitcoin to the targets that we have. You know, we have looked at this head and shoulders. We've drawn all this and been following it, you know, for a long time now. But I essentially think you're on your third wave. I think that actually what's going on, certainly with the rate hike, so if they don't even do a rate hike, that'll be interesting. I think markets will go mad. Certainly as we had 50 kind of at the start of the month, priced in basis points. But I think you're looking at something like this, guys. You know, I think Bitcoin's well on its way to 30K plus. We actually did say 30K by the end of March at the start of the year. However, I don't want to brag. Now, coupled in with all of this, guys, so we know, and I'll be back to covering the charts and where we're sort of going at tomorrow. I do have a weekly meeting with my Patreons. If you want to get in the Patreon and attend that, it's at 6 p.m. or sorry, 5 p.m. UK time. But now that we've gone over that, guys, I want to play this clip of Dillian Leclerc because this is interesting, guys, and I want more so than anything people to understand what's going on and have some sort of protection in regards to it, even if it's a small bit. Now, I'm not even saying buy Bitcoin. You need something outside. It can be gold. It can be whatever, guys. It could be, you know, I don't know, for example, alcohol that you know, has a value outside of what they essentially tell you a value is. But I'll go ahead and play this clip. I don't want to get too doom and gloom because ultimately I'm not. I just think that, you know, things are getting pretty wild out there. And I think that Bilaji is onto something. I just don't think Bitcoin's going to a million in 90 days. I think maybe in a few years down the line, potentially. Who knows? We'll see what happens. Certainly if the printing does come in and continues to come in the manner that we've seen it start.
A fun stat for you guys. There's been 2 times in the history of U.S. financial markets that stocks and bonds have drawn down to this level in the same year. It's actually, there's only, I think, 2 or 3 years that they've ever both drawn down in tandem. But both of those years, they both drew down 20% plus, and this is one of those years. The years were 1931 and 1969. 2 years after, within 24 months of both of those events, the U.S. defaulted on its debt. Both times, they defaulted on their gold promises. One was FDR, who basically revalued gold higher and they confiscated everyone's gold. The second one was the Nixon shock, where they basically said, nope, global central banks, we're not honoring your promises. This is just paper money now. So here we are in a paper money world. How do they default on the debt? And once again, they're going to default in real terms. They're defaulting in purchasing power terms. They're going to do that by printing, debasing the currency. Creditors, bondholders lose their purchasing power. And where's that purchasing power going to go? That's the $100 trillion question. That's why.
So very interesting, guys. This is something that I've actually put a PowerPoint together on, and I'll probably share that at some point this week. It's going to be an interesting Monday, certainly going into the rate decision. We'll see what comes out of all this. You know, there's going to be a level of things don't happen exactly when people want them to, right? And typically, I think they'll try and contain this. You know, that it will come across as QE's back on, and you know, things are good, and we'll have this kind of good period. And then what will happen is likely, and it will couple up with a lot of the things that we've been talking about, like the yield curve inversion. We're getting, I mean, look at this for a move, guys. If this ain't a trend end, you know, we were watching this. We called this short, literally up here, guys, on a bearish divergence. People don't like the RSI. I think it's a great tool on the sort of weekly. But typically your crashes occur when your yield curve is uninverted. And I think that's coming, guys. You know, these are all precursors to crashes. The actual crash, if you overlay stock market, usually doesn't come up until point of inversion. So you're going to have this period, you're going to have this window, and then something's going to happen, guys. That's my honest thoughts on this. I want people to be prepared on it. We'll keep you up to date on it every single day on this channel and kind of where we think things are. You know, we've looked at the little bit more insight here is 2-year leads Fed funds. Fed fund pivot in terms of coming down is usually very negative. If you look at what happens when they do this, you overlay the stock market, you can see that there's some, you know, look at what happens, guys. Stock market typically crashes on a pivot. So there's going to be this window. If this leads it, there might be this window of opportunity where rates just do this. Markets will do this. And then something, when the Fed fund drops, is coming, guys. So you could even put in a new high here. Certainly if things get unruly. Not calling for that sort of a steepness in terms of a crash. But anyway, rambling on now, guys. Hopefully you've all had a fantastic Sunday. I hope you've enjoyed this video. If you have, a like is always appreciated. So is a comment. And I look forward to seeing you all in the next YouTube video. I'll leave a link to Bilagi's tweet. Also, this video of Dillian Leclerc. This tweet here of Lynn Alden. Banking crisis is definitely in Credit Suisse and CBDC is definitely trending on Twitter now. Going to be an interesting Monday, guys. I'll see you all then. Thanks a lot for watching. See you in the next one.